TheoTrade. This is Don Kaufman. It's May 16th, 2025. 45 minutes to go to the cash close here on this Friday afternoon. Once again, marketplace to the upside. S&P's right now up some 39 handles. We got ourselves some upside exuberance. I mean, I've seen everything this week from like gamma squeezes to just an absolute kind of wild 2 sigma move inside of the S&Ps. I am going to break all of this down for you right now on this TheoTrade weekend update. As I was saying a moment ago, so the S&Ps, once again, this is, I say exuberance to the upside, but this is more like positive drift. It is slow out there in today's trading session. The S&Ps at this point, and I look at this like, how fierce is trade today? Based on volume, it not only isn't fierce, it's trickling to the upside. Nevertheless, it doesn't make a difference. Look, price action is there, right? We're trading now in the S&Ps 59.73. So it doesn't matter, what I say about volume, but there's not a lot of commitment to trade. And one of the things I was talking about extensively, like last week it was like we were in a holding pattern, and literally we were. This is, I'm actually going to close up this left side bar because it's a really interesting chart to look at. This is a 30-day 1 hour. We are in a holding pattern for a pretty considerable period of time. Something's going to happen with tariffs. Anything all of a sudden pop to the upside this Monday, and we kind of ignited from there. And when I say, pop to the upside, let's really kind of break that down. For that, I'm going to cruise over to the SPX and kind of zoom in on this. This is just this week. Pop to the upside looks like this. Look, last week we ended, okay, in and around 56, and I'm just gonna kind of round it right now for everybody. We ended right around the 56.50 level. Where are we trading right now? That's right, people, 59, okay, 50. So what do you have? You have a 300-point move to the upside. What was the market expecting? Well, we were expecting about $130 move. So to just briefly kind of break it down for you, when I'm like throwing out terms like it's a 2 sigma move, I'm just talking about like standard deviation. Right now the marketplace was anticipating, if you will, a 130-point move. Yeah, no, it didn't get a 130-point move. It got a 300-point move. So put on your big boy pants. We just had, if you will, and this is kind of a weird thing to talk about, but just had like upside volatility. In the marketplace, it didn't just get it wrong. It got it wildly wrong. Now, look, we're not closed yet, and the S&Ps could come selling off. I don't think it's going to be a massive sell-off, but they could sell off to some degree over here, and I wouldn't be surprised to see that. Nevertheless, we are still going to end up, okay, dramatically outside of what market forces anticipated. And to me, that's of critical importance, because on Monday, I was actually saying this on Monday, and I'm like, look, the marketplace on Monday didn't do anything unruly. We just jumped right to the upper edge of an expected move. And it was a big jump. The S&Ps are up 130, 140, okay? But the reality is that nothing happened, nothing was astounding until you actually close out the week. And right now, now we're getting ready to close out the week with 300 points higher. Now we can say, all right, this was a big boy week to the upside. And that it's important because very often people are looking at like overbought, oversold indicators, which look, I can do all day long. Like I can bring up, I'll bring up spiders for a second and apply like a TheoTrade RSI Laguerre. Oh my gosh, it's in overbought territory. According to the RSI, it's overbought territory. Down over here, that one, the fractal energy is run out. The energy of this move is diminished. It's actually, that fractal energy really is. It's like one of the lowest that we've seen like in recent history. Nevertheless, the point that I'm trying to make is, it's wildly overbought. The reason I use this like 2 sigma, it is a much more statistical means, if you will, of indicating overbought and oversold. And that's why I say there's some upside exuberance. Now, there's a lot of people that are going, oh no, man, just get on the bull train. And look, I've actually got bullish positions on. A couple of in-out spreads here and there, but I've actually done a lot in catapult on the bullish side. This week, I actually went after Google pretty big. Like if the market continues to rally, look, Google's going to explode back to the upside. I don't care about, all the different, lawsuits and yada yada yada, and they're losing search. It ain't going to make a difference. If the market explodes to the upside, Google's going to go with it. So I've got some catapults inside of Google. Okay, a couple of the bullish positions. One of them is in Palantir. Nevertheless, okay, in the near term, using, if you will, a much more statistical means. Okay, I mean we're way outside of the norm. Now that doesn't mean we have to like reverse immediately, but it sure doesn't help. Okay, there's a couple of aspects in here. There's no question, like, and I'm not trying to bear up anybody, and get you bared up, but you're still in a position right now that when you look, okay, and again, I want to deviate back to the S&Ps, and I want to go to that 30-day 1 hour. And when you look at this, you still recognize that you're in the position, okay, that you could still be a tweet away from another 200 or 300 point move. And that tweet probably wouldn't be the administration. The tweet would probably come from somebody like China, India. Okay, people get a little bit, little crazy, a little bit unruly. But, there's this huge area of consolidation down here, and it really is a huge area of consolidation. This week, yeah, you pop to the upside. Most of this was actually a gap print higher, okay, from Sunday to Monday, obviously on tariff news. And we just basically trickled a little higher throughout the course of the week. I say trickle higher. We kind of squeezed a little bit here or there. And that's where, again, I don't think there's anything too shocking. Like we've seen a lot of 2 sigma moves. Okay, it depends on how long, obviously, you guys have traded for, but we saw 2 sigma moves recently to the downside. Now we're just basically seeing it to the upside. So it is a bit of upside exuberance, though. There's no question about it. The one thing that's strange, though, is, you have this $130 move that's priced in, and then the market moves 300. And then what does volatility look like for next week? And the volatility next week is greatly, greatly diminished. Now, I realize that we're coming in next week, late next week, we are coming into a holiday weekend. We're going to go into Memorial Day weekend, okay, for those of you that are not necessarily US based, next weekend, okay. Markets are open on Friday. They're not open the following Monday, but markets are going to be open on Friday, but it's going to be slow, right? So it looks like that's already priced in. But the shocking aspect of this is that the expected move for next week right now is pricing like near $92. And that just doesn't seem like enough given some of the price action that we've seen this week. So, whenever I talk about taking the over under on expected move, like I would take the over, and what that means is I'd say we're going to move a lot more than like $92. Like how can you move $92 when, you had a day this week where the markets got it wrong, you move 140, 150 points in a trading session. At one point, you're up 160 and pulled back off that. It's tough for me to understand how the expected move collapses that much. There's also another really kind of interesting facet over here, and that is the VVIX. Okay, the VVIX, which is kind of like indicative of hedging. The VVIX is slightly elevated today, just very, very mildly. And again, that is not a warning shot. What it basically is people are like, hey, look, volatility crushed really, really fast. Okay, we might not be completely out of the woods yet, so they're going to start to re-up hedges. So look for the VVIX to actually head back up. And when it does start to head back up, yeah, the higher it goes, then we're getting a little bit of a warning shot kind of fired. But it's also interesting that volatility, it didn't really dump any lower from where it was kind of on Monday. So Monday, obviously in the big, the shock to the upside. China comes out, they're going to play ball, big shock to the upside. And volatility hasn't really dumped any lower from that point. Similarly in VIX. VIX is, 17.5 right now. In my opinion, that's probably very close to a floor in the current environment. And what that means is, okay, I don't think that volatility goes much lower from here. There's still a mass of risk that exists out there geopolitically, okay, right here. I mean, how many risks do you really want to point to at this point? It's too numerous. I mean, to even try to fathom, okay, where that risk is coming from is too much to even comprehend. So I think the VIX has a floor in or around 1750, which that does imply, okay, that if you're looking for volatility positioning, okay, that this is probably a decent time to do so. So if we continue any rallying, on next Monday or Tuesday, even though, like I know a holiday weekend's coming and, towards the end of May, but if we rally a little bit more next week, I don't think you're going to see vol drop very much. And I am going to be taking, okay, bullish positions in volatility. Not because like I'm not saying like volatility is going to go skyrocketing, but if this is the floor, okay, like if you're lying dead on the bottom of the pool, there's probably at that point, you can lie dead on the bottom of the pool, but there's probably some upside potential still. And we're not completely through what could be really horrendous kind of exogenous shocks. Shocks are still going to come to this marketplace, right? So you get this 2 sigma pop to the upside volatility. Let's talk a bit about bonds, okay? Bonds don't seem to be able to get off the floor. And the floor in this case is they're down there wallowing in the mud. Look at this on a 3-year time frame. We're at very, very critical levels. So close, okay, to some of the lows that we've seen in the bonds in here, let me actually open up a massive chart, if you will. Okay, that is 15 years of bonds. And effectively, we're about as low as we go. They can't get out of the mud. And it still feels like they want to go lower. So if you want to preface, different risks, because some people are like, nope, China, we're all good. We're through that one. And oh, we're through this risk. Well, here's one that's going to start to surface, okay, as soon as this next week. People are going to forget about the whole tariff thing, unless, of course, China comes back and they're like, no deal. But people are going to start to forget about the tariff idea. And they're going to start to look, okay, at the bond market. And one of the reasons they're going to start to really look at the bond market is because there's new spending bills and so forth being passed, okay, possible tax cut extensions. And what I believe is going to occur on that front is sell-side activity in the bonds. Why? This is what we term bond vigilantes, the vigilantisms, right? It's like the Batman of bonds. Effectively, what I'm saying is if the spending is going to be out of control, the bonds are going to continue to sell off. It's not good. Okay, it's just America's continuing to borrow. We're a bunch of degenerate borrowers. What happens? The bonds actually sell off, sends interest rates higher. Okay, Scott B over at the Treasury has a little bit of a panic attack. There's going to be great opportunities in the bonds. But here's the key. Yes, I am trading the bonds. Yes, I am actually selling puts in the bonds because I'm of the belief the Treasury Secretary is not just going to let the bonds sell off into the oblivion. But at the exact same time, bonds, I think, could be the origin of the next risk to the S&Ps. So if you're looking at the S&Ps, they're going to be all bullish. Better watch out. This bond market right now, this thing could get edgy. And if it does sell off and it starts getting under 112 or even 111, okay, crap's going to get real in those S&Ps. Markets are going to look at this. They're like, the economy cannot sustain higher interest rates. We just took a hit from the tariff debacle over the last couple of weeks. Say what you will, we're through the tariffs and everything, right? That still ripped a hole in the economy. I mean, people got fired. There was all kinds of crap going on. They're still raising prices. I mean, Walmart just this week said, I'm sorry, we still have to raise prices because of tariffs. It is what it is. It's going to still have like this bottom line impact, as are these bonds. And these bonds continue to sell off, and they're close right now that you're going to have some problems next week. And I think that this is going to be front and center. Markets are always like this hall of horrible things that can happen. It's like a merry-go-round, right? It just keeps coming around and around and around. It's tariffs. I'm not scared of tariffs anymore. Well, are you scared of bonds? Yes, I'm very scared of bonds. Okay, well then it's bonds, and then earnings come around. They go, holy crap! And then there's a deep seek moment where AI and we forget about it until it comes back again and again and again. And that's the hall of horrors, the merry-go-round of risk. And right now, I think next up is going to be the bond market. All right, bonds can't get off the floor. All right, gamma squeezes. We've seen some gamma squeezes this week. And what I mean by gamma squeezes, people talk about short squeezes all the time, and that phrase is just used too often. Yeah, part of this upside, marketplace was definitely short squeeze. But when I'm talking about gamma squeeze, this is when you start to look at individual products, okay? And you can see literally what was the driver of the marketplace. Hey, not on Monday. Monday was the market as a whole exploded up. But on Tuesday, okay, Nvidia squeezed. Nvidia squeezed in here, and it was very, very apparent right out of the gate. And what I'm talking about is this is call buying activity by retail. Okay, proprietary trading firms. This is call buying activity. When you buy calls, it forces the market maker to sell you calls. The market maker turns around after selling the calls, buys stock, and you get this cyclical feedback loop. The more stock the market maker buys, the more calls that you buy. The more calls you buy, the more stock they have to buy. And all of a sudden, you're in a feedback loop, and that, people, is what is a gamma squeeze. We haven't seen them to this magnitude in quite some time. When the markets kind of fell a little bit more quiet, though, you actually saw us really starting to squeeze higher. Most of the markets didn't do that much, though. They just popped. Like if you look at like Broadcom, okay, what did Broadcom do? Pop and then completely flat. And that's what the whole market kind of did. Like, pop in Apple and then boop, completely and totally flat. It's dead. I mean, look at the candle over here. Literally, it looked like an earnings announcement and then nothing happened after it. Okay, so we had Microsoft. I'll give you Microsoft actually continued some momentum to the upside. Amazon as well. Okay, Amazon, good news in here, right? Tariffs are off until it actually faded a little bit. But the point being, okay, is we have seen some gamma squeezes in what is some quiet trade. As long as trade remains quiet, you're going to get that positive drift. You're going to get those gamma squeezes, okay? And that's just the reality of it. And that's why I say it's a little upside exuberance in here, because the last thing is like there's a bit of a tech frenzy kind of coming back over here. I kind of feel like we're buying stuff again that seems worthless. There's some stocks out there that are worthless, and people are going to disagree with me. But when I start looking at stuff like Supermicro, okay, Supermicro, that thing's back on the bid. You guys realize like how many counts of fraud this company was actually accused of? Huh? Anybody realize that? Oh, don't worry, that gap lower over there. They found like relatives, getting stocks, favors, and everything. This thing was almost delisted. Its own accounting firm, okay, walked away and didn't want to actually do any business with them. Literally, their accountants walked away from them. Okay, and yet look at it this week. It's squeezing back to the upside. All of a sudden, all the risks of yesterday are gone today. Okay, Nvidia. We find out like Nvidia. Okay, is by the way, Nvidia obviously has a lot to do with Supermicro. We find out this week that Nvidia, okay, is one of the investors in like CoreWeave. Talk about buying your own crap. I mean, this is the stuff that we're actually dealing with. And most people don't care, but it is a sign, if you will. And that's why I was calling it like exuberance. It's a sign of exuberance, and it's amazing that it immediately came back. It's like we didn't even miss a beat. We went from holy crap, the world is falling apart to let's get stupid again. Let's get stupid. Let's buy our own crap. By the way, that is, you can't even believe that. Nvidia, okay, invests in CoreWeave, and obviously CoreWeave buys Nvidia products. That's what they do is they buy, again, it's a gigantic circle of life that generates nothing but financial cataclysms. Anyway, onward. Okay, Meta, taking a look at Meta. Meta, huge pop to the upside. Meanwhile, Meta very quietly announced that their Goliath AI release, not doing that well. They actually had to hold that back. A little bit of sell-side activity in here, but nothing crazy. You want to know why? Because no one cares, because we're still seeing the tech frenzy is back. Okay, tech frenzy is back. Got to be careful out there. Keep your head in the game. Look, this next week, okay, of trade, as I said, what's going to take front and center is probably the bond market, right? I mean, that's, to me, is all of a sudden what's going to become the epitome of like important again as we start talking about, government spending and so forth. That's going to come front and center. I think we have some bond vigilantes in here. And if we start breaking through 112, 111, okay, it's actually going to reverberate back into the S&Ps and back into tech. That's the trade to actually look for. When I say the trade, I'll actually be constructing trades throughout the course of this next week, specifically on that notion. Now, last but definitely not least, we come back again to the SPX. So the S&Ps are up again today, but it's a little bit more nominal. 25 minutes to go to the close. You almost feel like we could actually sell off, but it's impossible, right? Nevertheless, okay, we still had this really explosive move. I mean, literally, this is the upper edge of the expected move, and we're what? We're a mile from it. That's why I'm saying it's a 2 deviation move. 2 sigma simply means if you looked at a distribution curve, this is 1 deviation. Out here is 2 deviations. We are up here, people. In fact, we're a little further than up there, okay? And yet, at the same time, and I want to reiterate this stance, 7 days out from now, the volatility has actually fallen, okay? And we're sitting at like a $92 expected move, and that seems inherently low. It seems low, and even though Memorial Day is coming up, okay, look, I still think get ready to rumble. One of the things that really bothers me right now is every weekend. Every weekend we keep getting shocks to the marketplace, and it's those shocks to the marketplace that, they're going to keep me on the edge. As I have said, week in and week out, not only in the down move, but in the up move as well. You want to get bullish? Fine, get bullish. I've done it, but I've done it with defined risk. I'm not going out there and buying the CoreWeave stock just because I think it's going up. I think right now, okay, we are still in that position to where at any point in time, one of these shocks comes to the marketplace and, that 300-point move up, we could drop like a rock. It's not worth substantiating that magnitude of directional risk right now. Use spreads when and where possible. Keep your hands and feet inside of the vehicle at all times. Have a wonderful weekend. Bye-bye.